In this video, I'm going to tell you about actual action steps you can use or do before the recession gets here, once it gets here, and after it leaves. You know that we've been suffering pretty serious inflation, and so the Federal Reserve is raising interest rates to try and slow down the economy, cool things off, bring inflation down. But the unfortunate follow-on effect to the increased interest rates is that there's going to be a lot more strain on consumers, on businesses, anybody, any corporation entity that borrows money. It costs more to pay for the debt you have. And so then you're going to get more defaults, delinquencies. People are going to lose their homes. A lot of people are going to have to adjust their lifestyle to deal with the inbound recession. And there's a lot of opinions about that we'll have no recession at all or a soft landing. And on the other side of things, there's people that believe we'll have a serious recession or even perhaps another Great Depression. Problem with the Federal Reserve fighting inflation like this is that they're sending us directly into a recession. And just before we get into action steps you can take before the recession, during the recession, and once the recession leaves, to better yourself financially, to help yourself, help the people you care about, before we get into that, please consider doing the Peter Leeds trifecta, which means like the video, subscribe to the channel, and make a comment. It really helps us out to get our message out to more like-minded people like us. So we'd appreciate it if you would do that for us. Thank you so much.
At Peter Leeds, we're all about getting you profits quickly and easily. Please subscribe for more premium investor enlightenment.
Here's a chart of inflation. And right there is when everybody was saying that it's going to go so much higher. It's a good scare tactic to get views on your videos, I suppose. Everybody, especially on YouTube, was talking about how inflation is going to go so much higher. And at that time, I told you it was going to go down first. And that's exactly what happened. What the Federal Reserve is doing is they're raising interest rates again and again and again, trying to fight inflation. And what that's doing is the higher rates are putting pressure on every aspect of the economy. Whether you're a business or a consumer, it just costs more to have debt. Therefore, it's this fight against inflation that's actually going to be putting us into a recession, which we would have had either way, regardless of the Federal Reserve's decisions and actions. I put out the video, The Rolling Recession, to show you how different aspects of the economy are actually going through a recession, just one at a time, so you don't notice it as much. For example, this is from Franklin Templeton, U.S. Recession Risk Indicators. And you can see here where there's a red X, that means that it's already in recession. So you look at housing permits, job sentiment, profit margins, commodities, money supply. All of these red X's represent when that aspect of the economy is in recession. We're going to start by talking about what to do before the recession gets here, because that's the situation you're in right now. The recession is rolling through the economy one piece at a time, but at some point it's going to really be an undeniable recession. No one can mince words about whether or not we're in a recession. It'll be obvious, clearly obvious to all consumers, all businesses in the economy. So you need to decide what you believe is going to happen so you can position yourself for that eventuality. You need to audit your personal situation. How secure is your job? Who are your dependents? Who might become a dependent in the future? I'm thinking about maybe your elderly parents, especially if they're going to be relying on a pension. Most of the pension funds that people are going to be relying on are already broke, or they're not going to pay out what the pensioner expects to get from the pension based on how much money they put into it over all the years. How much do you have in savings? How much do you spend? It's important that you take one big audit of yourself. Get an idea of looking at where money's coming from, where it's got to go to, how long is it going to last you. It sucks, but this is something that I really think will benefit you a lot as the recession rolls right through. And have some dry powder. Get some cash reserves. You're going to need that for later when we get into during and after the recession. Whatever amount of cash you can bring to bear, even if it's from selling other assets to get that, it's a good idea to have some cash on hand. You're going to need it as we go through the recession. You should immediately adjust your lifestyle, even your plans. If you're expecting to buy a Lamborghini or you want to buy a Lamborghini, maybe that's not as realistic anymore. And when you have the choice between taking the whole family out to a big sushi meal at the restaurant or making pasta at home, you should lean towards maybe saving money a little bit more than you want to. Now's the time to start taking it seriously. Now's the time to prepare. If you prepare ahead of time and you start adjusting your lifestyle, how much money you spend ahead of time, when the recession gets there, you'll be in a much better place than you otherwise would have been. Make a watch list of a bunch of stocks you think would do well in a recession, or the best types of investments for when a recession gets here. And I'm going to tell you a whole bunch of them in just 1 minute. But I also want to say that on that list, put stocks that if they become oversold or undervalued, that you want to invest in them. A lot of stocks that are a bit pricey, if they come down a lot in price, which stocks are you going to be looking at accumulating? Once a recession gets here, a lot of values of property, a lot of values of different stocks will change a lot. A lot of them will decrease in value so much that then it becomes an attractive investment. You might want to own shares of Microsoft, but they're too pricey right now. The recession might bring them down. You want to keep an eye on these because you want to see as it declines in value over time and it keeps on declining, it'll help you know better when to pull the trigger. Do not act too soon. Less experienced investors always act too soon. A lot of times a stock will drop 50% in value and you think that's a great deal or a great bargain because it's a lot less expensive now or it's undervalued. But a lot of times that stock drops 50% on its way down 75%. So don't act on the first 20 or 40% profit you might see or opportunity you might see. Wait a bit longer because things tend to go so much more extreme than you expect at first. You think it'll get bad, it usually gets even worse than that. Or you think it's going to get really good, it might even go much further to the good side. Things usually go further than you would expect. But when you are ready to make a move, when you are ready to get a bargain or collect one of those undervalued stocks, always scale in and scale out. Any trade you're going to make, you don't have to invest 100% on the first trade. You can invest 30%. Watch the stock for a while. Invest another 30% later. Watch for a bit. See if you change your mind. You can then invest even more money or put your money into a different asset, a different investment. But you can choose on the fly as long as you don't commit fully on any trade. You always scale in and scale out. Now I'll tell you a bunch of things that I think are good investments, in my opinion, before a recession gets here. These are things that will do well during a recession. You want to position into these investments before the recession and then benefit as the recession rolls through town. And the beauty of this is that all of these investments work really well whether or not we get into a recession. For example, you guys know that I'm a huge fan of precious metals, not just gold, but silver as well, platinum as well. And they generally all trade relatively similarly. They all trade in the same direction at the same time, just not the same magnitudes. Gold will generally do much better in a time of war or with a deterioration of the US dollar. As they have quantitative easing and they create new money to pay for wars on 3 different fronts, that's all going to put less value in the dollar, and therefore anything you buy the dollar is going to take more dollars to buy it. That's why gold prices are likely to increase in price the more monetary creation there is with the US government. Silver is more of an industrial metal. So if there's a recession or the economy slows down, there's less demands on silver. Therefore, silver prices don't do as well in a declining economy. I will say that my expectations for all precious metals are for them to go much higher. And the best way I find to benefit from a move like that is by getting involved in high quality mining companies that mine that metal and sell it. Actual productive companies, not exploration companies. Before a recession gets here, you might want to look at getting into things like utilities. And this is not personalized trading advice. I'm just giving my opinion. Things like utilities, cell phone companies with recurring billing, enough recurring billing to cover all their costs. Very short-term treasury bills, GICs, that kind of thing. I wouldn't get into the money market for the long term. Don't buy a bond that's going to mature in 10 years. But if you're going to look at monthly periods, you should be okay to get into a GIC or something like that. What often does well during a time of a weak economy are some really boring investments, some really boring industries. Funeral homes, casket makers, rendering plants. A lot of these go under the radar. They're not the hot industry, but they always have business and they tend to maintain their value at very least as the recession passes through. A lot of military companies will do very well during a recession because a lot of times as the economy gets weaker, more wars break out, and there's always going to be a need for military. There's always going to be money put into the military. So defense contractor kind of companies. And another one that always does well or holds up during a time of recession, major economic weakness, it doesn't matter for certain healthcare things. You're going to pay whatever amount of money to get the treatment you need. A lot of it is mandatory kind of surgeries. A lot of medical advancements are so powerful in terms of how much money and time they save that they're going to do fine no matter what. So all other things being equal, if you invest in a healthcare company, a lot of times they'll be fine or hold their value through a recession. What to do once the recession gets here? And I don't mean like now when there's a recession rolling through the economy a piece at a time. I mean when it all comes together and we have an undeniable recession. When that happens, here's some of the things that you might want to consider doing. You're of course going to be monitoring your list of stocks that you want to get into, but you're also going to monitor your portfolio. Do an assessment of all of it. What stocks would you buy today if you had to buy it with new money? Would you buy the same stock again right now? And any of these prospective investments that you're watching that you're hoping their price comes down a little bit before you buy it, keep watching them and keep watching the prices come down lower and lower and lower. Don't jump the gun too soon. You let it come to you. It's going to come down a lot more than you probably realize when it first starts dropping. We're seeing this play out in real time in the Canadian real estate market. Prices are just coming down almost like a bubble's popping again. It was a bubble, one of the most overvalued real estate markets in the world. It popped, it started coming down, started going back up, and it's turning the corner and coming back down again. I was talking to a guy the other day, and he's looking at 3 different properties around here, and he's watching the prices decline, just drop. He's just waiting and watching the prices get cheaper and cheaper, the value get better and better. But that's in Canada, so don't worry about it. Same thing's going to happen in America, it's just not yet. During the recession, you got to keep educating yourself, and this goes for before and after as well. Always keep educating yourself. You have no excuse not to. There's all the information you want to know at your fingertips, anywhere there's Wi-Fi. Just don't waste your time. During the recession, when you're in it and you're seeing all the difficulties with various businesses, people are losing their jobs, people losing their houses, people going delinquent. At that point, do not waste any of your time. Keep learning, keep educating yourself. During the lockdown, we had a huge increase in our online courses, like our Peter Leeds Academy or the 33 Profit Patterns Trading Chart course. And I always respected that when a lot of people are just unsure what's going to happen and no one's going into work. And instead of just sitting there and watching movies, they would try to learn more, better themselves. Now what you're going to do is every 6 months, I want you to check in and reassess your situation. The portfolio you have, the money that's coming in, the money you're spending, any of the investments that you want to invest in that are not quite cheap enough yet, but you're watching them, reassess what you're watching. Reassess your expectations for the timing of when you're going to actually pull the trigger. Every 6 months. I want you to do that every 6 months at least. If you want to do it every month, every 3 months, that's even better. Because a lot of things are going to be changing on a month-to-month basis. So what might work at one point of time may not work, or would work even better at another point in time. So you want to keep reassessing, take all the new information in, the new situation, and plan your moves from that point. And when you assess, here's what you do. When you're laying in bed at night, ask yourself, what's giving you stress? What's on your mind that you keep thinking about and it's keeping you awake at night? What are your stress points? A lot of times just noticing the 2 or 3 things that are giving you the most stress actually is the first step in dealing with them. Another thing you do when you assess, ask yourself, how far along in this recession are we? Because you want to be ready for when we come out of the recession, because that's when you actually have to put all your money to work. That's when you have to be very active. When I was a kid, I heard this riddle about how far can a dog run into the woods? And the answer was it can run halfway into the woods, because then it's running out. Keep asking yourself, how far along into the recession are you? Because when you get to about the halfway point, that's when you want to start taking action. There's a lot of stuff you have to do to put your money to work. Start using your dry powder. Make your moves then. And I'll say again, just like I did before the recession got here, always don't act too soon. And when you make a move, scale in or scale out. Don't do everything at once. Don't say I want to sell the stock and sell all of the shares of it. Sell a portion or buy a portion. After the recession starts to leave is the funnest part, because that's when you're doing the most activity. You're putting your money to work. You're getting some great values and bargains. After the recession, once it starts to move out, and you'll know it because there'll be a pretty significant bounce where all of a sudden the market pops 4% or something like that. And that's the beginning of coming out of the recession. All these undervalued stocks suddenly rebound. That should indicate to you that this may be the beginning of coming out of the recession and a lot of economic expansion from that point going forward. This is the part where I say to pick up capitulation. That means in real estate, stocks, cryptocurrencies, even vehicles, artwork, furniture. And it goes so far as to getting a really expensive set of golf clubs that you get for pennies on the dollar. I talk about in UP.THINKING that the best time to buy any asset, to buy anything, is during a time of capitulation. This book is available, link below, makes a great gift. Available only through us at the link below. And after the recession starts leaving, that's when you want to be making sure that you put your cash to work, not personalized trading advice. This is where you want to be buying with both hands. The stuff you've been watching that came down to your price point, where you wanted to buy it at. It got there. Now act on it. Take action. That's what you set up for. Even things like a triplex or a duplex or somebody's house you can get for a lot less than you otherwise would have had to pay. After the recession, you also want to consider your dependents. Who is relying on you to help them? So help people that are dependent on you and other people in your social sphere. They had a hard time too. Check in with them and see how they're doing after this recession tore through town. When it's clear that we're coming out of the recession, you should be fully invested. You don't want to be sitting there with a whole bunch of dry powder that you don't actually use to take action. You want to be fully invested, especially if you get to any capitulation points. If something capitulates, they're throwing the baby out with the bathwater. They're just giving away the shares, or they're giving away the cryptos, or they're giving away the real estate. Act on it. And if you like our content and that we're ad-free, then consider joining peterleeds.com/army. That's what keeps us ad-free, sponsorship-free, and we do all our work for everybody in the Peter Leeds Army. We love you guys.
At Peter Leeds, we're all about getting you profits quickly and easily. Please subscribe for more premium investor enlightenment.